Hello and welcome to the first video on my channel, Proxy Financials. The idea of this video is dedicated towards compound interest, and the principle is you make 10% of your money every week that you do in stock trading, and you just keep reinvesting this over and over, and it forms a giant ball of money that you push down the hill, and it keeps rolling up, and it's the big snowball effect that Warren Buffett always talked about. I think 10% is a very good number. One, I think it's also realistic. If you look at a lot of the stocks, especially in today's market, it's very volatile. So this doesn't seem like too much of a stretch. With that said, if you like this type of video, make sure you hit the like button. Helps me with the YouTube algorithm. Also, please subscribe. I need to grow this channel, and then the more I can get it to grow, the more videos I can produce. Something that I've always wanted to do is create something like this. I'm a project manager in the clinical settings, so I get to work with budgets, millions of dollars all the time. So for me, this is really enjoyable, what I'm showing you today. I think this is the better option for everyone. If you try to do this method, I hope it works out for you. But then again, please also remind yourself, this is just for entertainment. I'm not a financial advisor. I'm also not a CPA, but there is one thing I will say. If you can get to the end of fiscal year 2 using this method, I highly suggest using a CPA because you're going to have a lot more money than you think. And always seek out professionals when you are dealing with a lot of money. With that said, let's begin. Here we are in fiscal year 1. As you can see, you start with $1,000. There's $100 per week that you start off with. Of course, it goes to 110 the next week. But as you can see here, that's how it works. So on the left side, the light green, that is your money that you have to start with each week. And the bright green, that's all the money you're trying to make each week. And the reason why I set this up is it's easy to look at. It tells you how much you need to do. And in the end, it's not that hard if you just stick to the whole idea that you have more or less 5 days to get 10%. For a lot of people think, well, if I get 2% a day, that's pretty reasonable, especially when you think about the market. I mean, how often does the S&P go up and down 2 or 3%? So if you understand the indicators and you know your stocks, this is an excellent opportunity for you. For myself, they're the nice stocks that I've been looking at. And I've been more or less learning how it functions, and I also know it's catalyst. So for me, when I do this, I will be doing something along this line. So we come down here at the very bottom, 36 weeks. That's the milestone. It's your first week of no restrictions for day trading. If you don't know what this is, it means that you can, if you pattern trade yourself, more or less you do more than 3 day trades in a week, you get flagged. Your broker can put a suspension on you for up to like 90 days, and that's a lot of time that takes you out of the market. Instead, what you really want to do is focus a lot on this. Focus on the 3-day trades per week. One, it keeps you responsible for your due diligence. Make sure that you know what you're doing and you're not just trading on emotions, which is probably one of the biggest things that hits a lot of new traders. And I'm not an expert, but at least I'm a novice. One thing I've definitely learned over my time, don't trade on your emotions. They'll always backfire. So with that said, we keep going down. At this point, we're going to show off this. This is your end of the year for the first year. So you started with $1,000, and then as you subtract it from the total, you end up with $128,000. It's like quite a lot of money. You're making almost 3 times more what the average person does. And that's of course the United States I'm talking about. However, the government likes to take your money. That's what the red is. Those are taxes. You say, well, that's a lot of money. Yes, it is. And how did you find that? Right here in my appendix. Here in the appendix, I created a brackets for the single and married person. Married people get a lot of privileges, if you want to call it that. And that means that basically their taxable income brackets are much higher than the single person. And the fundamental idea is that both people are working. If you're lucky enough to be the only one working, in which that's the case, I really hope you don't need to follow this too much. But if you are able to earn extra money, that's great. Single people really do get left out until you get to about that 35% to 37% brackets. Then married and single is pretty close, in which at that point I would almost say single people are benefiting a lot more. But if you're in the 32% and lower tax brackets, being married is very useful. So after all that said, my taxes for the year will be $19,767. It's a lot of money. The government likes to take a lot, but it gets worse in the next year because you'll have more money. So that ends my entire year at $108,000 and some change. We come here to fiscal year 2. At this point, I suggest we switch up the system. I won't be using a lower stock value. In this case, what I used in fiscal year 1. Fiscal year 2, I strongly suggest you find different stocks and you start to learn about them. And when I say different stocks, I think of stocks that have a higher cost value, but also have volatility. An example would be like Tesla. Excellent stock overall to just own itself, but it is valued pretty high. So even if you have like hundreds of thousands of dollars, you're only going to be able to buy so many shares. So $100,000 is still going to get you like 7,000 shares. And you may think that's a lot, but you have to understand it has a volume in the millions. So it's relative to the volume, it's not that much. The big thing about this is also, I would say, look into things like inverse ETFs. Basically what this means, you got a bull and a bear and they teeter-totter off of each other. As one goes up, the other one goes down. You can find these all over. It's something that's going to be able to be useful in hedging your account so that you can go with half and half. And then as one goes up and the other one goes down, so one that's going down, you can just really move the money from that. If you're doing like an intraday trading, which is trading from the one day to the next, and then throw it all into the money that's going up, then you can ride that up and then day trade that. This way you're cutting off your losses, but then you're also able to regain more money on your return. And I think that's very useful. Most important thing is notice how your money that you're using is much larger. Of course you are. It's $100,000 you started with, not $1,000. So we come down here to week 26. You are now a millionaire. This is actually very nice. I think a lot of people would love to be able to be a millionaire. I know it's one of my goals. So I come here, pre-tax, you're looking at $12.8 million. Then here comes that government taking $4.7 almost million away from you. All that hard work. And then you end up with 8.1 million. To me, this is an enormous amount of money. May not be for some people, but to me, this would be a life-changing event for me. Mainly because I would be able to reinvest this into other assets. And I think that's the very important thing. This is supposed to help you reinvest yourself into a better situation. If you're able to get to fiscal year 2, just for jokes, I have over here fiscal year 3. If you're to continue and use your 8 million and you went through that, you'll become a billionaire. But as you can see, you still get like a ton of money taken from you by taxes, and then you're not a billionaire. So really, I don't think it's worth it. You should just try to enjoy yourself. I mean, how many times can you say you can work really hard and really smart for 2 years and then retire? So that's what this whole strategy is about. This comes from my last thing here. So I want to say, most important thing before you start trading, think about paper stocks. When I say paper stocks, it's what we call paper trading. It's when you trade paper or numbers on paper rather than actual money. Things that I can think of that can help you is you can go to TD Ameritrade, Think and Swim, and of course Webull. They have these built into the platform, so you can just do it digitally. First, the way how I have it here, which is on my Excel spreadsheet, it's very simple. So, for example, I have here the Riot ticker, which is the Riot stock. They are associated to Bitcoin, but they are also a actual stock. So you see here you have different things related to this. 381 is how many shares I end up getting from my $1,000 to 162. I'm left with like $1.70 some cents. So I have in here showing a loss of 1%, but I can also switch that, especially since I know the stock really well. If I want to appear and gain a 3%, it's only $28, but I get 3%. And the whole idea is that when you get that 3%, you just keep reinvesting it. That's how you build up. Just like that app Acorns does for a lot of people, where they take money, reinvest it. It's kind of the same fundamentals. Here I wanted to show you also, you don't need to make 2% each day on a 5-day week in order to get to 10%, mainly because you're actually going to be over that. So if you get 2% on a Monday, every single day after that, you need just a little bit below 2% in order to hit that 10% margin that you're looking for. So I really hope this really helps out a lot of people. The last thing I want to leave you with is a little reminder. There's 252 trading days in a year. That means out of the 365, you can only trade 252. It's basically only 2/3 of a year can you trade. So you need to really focus on doing the best you can. Do your education on your stocks. But most importantly, just remember, this video is just about one thing, and that's trying to help you realize that there is a financial freedom out there. When the coronavirus hit, a lot of people realized that their job is not a security. Similar in 2008 when everyone thought their house was an asset. It really isn't. Your job is not a protection for you. The only thing that you can protect yourself with is yourself. I would like to finish this video with one final thing, that I will be creating a video every week and starting January of next year, as I will be taking this same strategy and trying to show that I can do it, and hopefully if I can do it, you can do it. I'm focusing on 10% return. That's what I want to do. So stick to the channel next year to see that video series. But until then, I'll be doing videos, and these videos will be basically paper trading. I'll be showing how I paper trade some inverse ETFs, how I paper trade Riot, and the stock that I showed earlier. So this way we can all grow together. Hopefully you enjoyed this. Please hit the like button. It helps out the channel very much. Also subscribe if you haven't. If you made it this far, you guys are awesome. Thank you.